This week, we are talking restaurant performance, and we'll take a closer look at jobs data. Welcome to the Weekly Livestock Market update on Brownfield. I'm your host, Meghan Grebner. With us, as always, is livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We will break down those reports coming up. We'll also preview supply and demand numbers, which come out next week. But first, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, fed cattle, they were pretty steady, but we'll call them down 25 cents this week. The feeder cattle auctions this week were anywhere from $1 to $2 higher. We did see lower futures prices this week. The December live cattle futures contract closed down $3, and the January feeder cattle contract closed down $2.30. We also lost ground this week on the choice box beef price. It was down $2.85 on the week, despite what was some stronger ribs on the beef side of the equation. And on pork, barrels and gilts were cash prices were up $2.75 this week. We also saw stronger futures prices. The December lean hog futures contract was up $4.50. That puts it up $6.25 in the last 2 weeks, Megan. So it's been a pretty good run on the pork side. The pork cutout value also gained this week, up $4.20. Those bellies were up strong this week. Hams were up this week, and ribs were up this week. So that's a much stronger pork cutout value. And if you look, the pork cutout value is now $15.25 above where it was a year ago, while the choice box beef this week was $14.80 above. So I think that's the first time in a long time that the increase in the pork cutout values outpaced the choice box beef price.
I would have to think, though, right now that that's really a solid sign for demand and something that the pork industry is welcoming with open arms right now.
Absolutely. If you think back to our conversations 3 or 4 weeks ago, we might have been worried about where pork prices were headed, hog prices were headed the last little bit of 2024. And lo and behold, we've had a very nice run, certainly suggesting stronger demand when you see these pork cutout values that continue to grow.
All right, Scott, let's take a look at those weekly slaughter numbers. At the end of the week, where are cattle numbers, cattle slaughter numbers, and hog slaughter numbers as well?
Yeah, so USDA tells us for the week ending November 2nd, a run of 615,000 head of cattle this week. That is 8,000 less than we did last week and 21,000 less than we did a year ago. While on the hog side, a run of 2.653 million head of hogs this week. That's 60,000 more hogs than we did last week, but 12,000 head less than what we did a year ago.
And when you look at those year-over-year numbers, how are they stacking up?
Yeah, so cattle slaughter continues to be down 3.8% year to date, and hog slaughter continues to be up 1% year to date.
Scott, are we concerned as we get into this last quarter of the year and start to wind down 2024 about available supplies of market-ready hogs at all, just because these slaughter runs have been so big, or we think that we'll be just fine?
So I think we'll still be fine as we get here in the remainder of the year, especially given what we saw out of the hogs and pigs report last. So I don't expect, even though we've seen some larger runs, that I don't see any problems as we finish 2024.
All right, restaurant performance index out this week. And when we talk about demand, this is a place where we go. As you look at the September numbers, what are you taking away from that report?
Well, so at least we're moving in the right direction. And when you look at where we were the last couple of months, it's been a couple of months of higher as well. So up 0.2% in that overall index for September. We still did not recover to where we were in June of this year. We're off still 0.1%. And I'll remind us, an overall index of 98.8 is still contraction. This is the index above 100 is positive, below 100 is contraction. And so we continue below 100 on the overall index. I look at it in about a 0.4% increase in the current situation component of the index as the most positive news that we got out of the restaurant performance index. Same store sales increased, customer traffic increased. That customer traffic up 1.3 points from August to September was a pretty nice run when you realize we were 4 points below that when we got the July data out. So maybe customer traffic still looks like it's moving in the right direction, which again, from my standpoint, I see demand that continues to be reasonably strong, and we're certainly trying to get back to that 100 in that restaurant performance index. Now, if you look at the expectation side of the index, it's still setting at a 99 this month, just as it did in August. And when you look at what restaurant operators said about that, many of them, 25% of them only, suggested that in 6 months they expected their sales volume to be higher.
When you look at this demand component, Scott, what are you most concerned about? And I don't want to like get into the jobs report because I think there's kind of an outlier this month, right? But in terms of knowing how crucial this is going to be to support beef prices, especially as those potentially move higher, and the strength that we've seen on the pork side of things recently.
Yeah, so I think when I look at this index, and I think about the average consumer out there, which nobody's average, I'll grant you that. However, it seems like to me that many of them are saying, hey, the prices I have to pay at the restaurant these days are high, and I'm trying to do my best to reduce that outlay where I can around the edges. I think that's resulted in what we've seen of less customer traffic, et cetera, as you and I have talked in 2024, but it's not markedly down. It's not in the, we're in trouble on the demand side. It's just, hey, at these kinds of prices, we're getting consumers who are shifting around and trying to eat out less. That may be at play here. You know, when you look at that customer traffic data, we've had now 18 consecutive months of customer traffic itself being in the contraction territory. So although we talked about it's better this month, it's also still below 100. So, you know, I think these high prices are certainly causing this kind of slowdown, if you will. And maybe that'll change as perhaps restaurant prices stop going up quite as quickly as we've experienced over the past couple of years, at least.
All right, as we round things out today, jobs report. It's been several months of decent jobs reports, and this one is really shocking when you look at the number. But I think it's going to be one that has a like check mark next to it. Talk a little bit about what you saw in these October numbers.
Yeah, so we didn't create very many jobs in October, that's for sure. When you see 12,000 according to BLS today, in terms of that October jobs report, I think we do need to set this one aside a little bit. And I say that because two big hurricanes in the Southeast had a lot to do with hiring being slowed. Worker strikes also were at play here. Boeing comes up as one of those companies where workers have been on strike for several weeks now. So I think that had a lot to do with what we got in terms of 12,000 jobs. And when you look at the pre-report from other sources of 105,000 was the pre-report midpoint, we fell far short of 105,000 jobs to be added. Now, perhaps more troubling out of that jobs report is we lost 112,000 jobs that was reported to be added in August and September. And so we went back and did that revision, slowing those 2 months as well. And those 2 months were much stronger than I think many of us would have thought. So we've kind of slowed all of the last 3 months, but until we get to the end of November here and talk about the next jobs report, I don't want to make too much out of just only 12,000 jobs being added this month.
One thing to look at as well, hourly wages or average hourly pay is still higher, but how is that stacking up to where inflation or cost are as well? How is it about to where does it sit? I guess I don't want to make any assumptions.
Yeah. These are always interesting data. So when you look at average hourly pay, just to keep everybody on the same page, BLS reported that at $35.46 is the average hourly pay out of this report. That is still showing a 4% increase relative to the year ago level of average hourly pay, which I think may be one of the pieces of the puzzle that said it's hard to get inflation tamped down if we keep seeing these wages growing at 4%. Now, we want to be careful about saying we want that to slow down because, of course, from a meat demand standpoint, more money in the pocket, all else equal, might mean a little more money spent on beef and pork. So there is some fine balance here, but we are seeing those average hourly pay numbers continue at about 4%, and this month was no different.
Scott, as we wrap things up today, next week we have monthly trade data, supply and demand numbers come out, consumer sentiment as well. On the trade side, in that supply and demand space, what are you looking for specifically?
Yeah, so we'll continue to see what kind of revisions we get from USDA in terms of corn and soybean yields for the crop we harvested this fall or are harvesting this fall. But again, monthly trade data for me, I think it's going to be more of the same, tough on the beef export side. We'll still be bringing in lots of lean beef on the import side of the equation. And I want to see where pork exports out of the United States look in this next round of trade data. And I'll say consumer sentiment for me, although it's going to be a very big week next week for consumers, just to see kind of their position in terms of the overall look ahead, I think is going to be important.
Scott, it's always great to see you and catch up.
Likewise, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.